You think your money is sitting in the bank, waiting for you, safe, locked away, yours. But the moment you made that deposit, your money stopped being yours. Think about the last time you got paid. Maybe it hits your account on a Friday. You check your phone, the number goes up, and somewhere in your brain, you feel safe, secure, like you did something right. You worked for it, you earned it, and now it's sitting there, just waiting for you to need it. That feeling, that sense of control, that's exactly what they want you to feel. Because while you're going about your weekend, something else is happening to that money. Something nobody told you about in school. Something the banks have absolutely no interest in explaining. Here's what most people believe. You deposit money, the bank keeps it safe. When someone else needs a loan, the bank lends out money it already has from other depositors. It charges interest on that loan. It gives you a small cut of that interest as your savings rate. Everyone wins. It sounds logical. It sounds fair. It sounds like a system designed to help people. A giant vault. Your money inside it. The bank acting like a careful middleman. For decades, that's the image that was built in our minds. Textbooks taught it, advisors repeated it, and most people never questioned it. Why would you? It made sense, but that's not how it actually works. Not even close. What actually happens when you deposit that paycheck is one of the most quietly radical things in modern civilization, and once you see it, you cannot unsee it. Banks do not lend out your money. They create new money from nothing. The moment someone walks in and asks for a loan, this is called fractional reserve banking, and the name alone tells you everything. Here's how it actually works. You deposit 1 lakh rupees. The bank is required to keep a small fraction of that on reserve. Let's say 10%. That means they hold 10,000 rupees. The other 90,000 rupees, they lend it out. But here's where it gets strange. That 90,000 rupees doesn't leave the banking system. It gets deposited somewhere else, into another account, at another bank, or even the same one. Now that bank has 90,000 rupees in deposits. They keep 10%, and they lend out 81,000 rupees. That 81,000 rupees gets deposited again, lent out again, and again. Your original 1 lakh rupees deposit has now become the foundation for nearly 9 lakh rupees in loans circulating through the economy. Money that didn't exist before you made that deposit. The bank didn't find that money somewhere. It didn't borrow it from a rich person in a back room. It typed numbers into a screen, and those numbers became real money. Money that people are now paying back with real interest. That interest, that's the product. That's what the bank is actually selling. Not safety, not service, debt. Now think about who benefits from this. Every loan the bank creates generates interest income. Car loans, home loans, credit cards, business loans. Each one is a stream of revenue that flows back to the bank for years, sometimes decades. And the cost to create that loan? Almost nothing. A few keystrokes. But it gets deeper. When you take a home loan, you're not just paying back what you borrowed. Over a 20-year loan period, you might pay nearly double the original amount. Sometimes more. That extra money is pure profit for the bank, generated from an asset they created out of thin air. Now multiply that by millions of customers. In every city, every country, every single day. And here's the part that very few people stop to think about. When loans are paid back, that created money disappears. It gets canceled out of existence. But the interest, that stays. That's real. That flows upward. The system is designed to constantly need more loans, more debt, more creation, because the moment the debt stops growing, the system starts to break. Banks don't just benefit from lending. They need lending to survive, and they need you to keep borrowing. So ask yourself, who does this system actually serve? Here's where it becomes personal. Banks don't force you into debt. They don't need to. They just make it feel normal. You grow up watching your parents take a home loan. You're told that's the responsible thing to do. Owning a home is stability. It's success. It's what adults do. Then you get a credit card at 22. It feels like freedom. Buy now, pay later. The dopamine of getting something before you've earned it. Then a car loan. Then a personal loan for the wedding. Then maybe a business loan. And somewhere along the way, you stop questioning any of it. Because everyone around you is doing the same thing. Debt becomes invisible. It becomes the wallpaper of adult life. And every time you feel financial stress, the system has an answer ready. Refinance. Top up your loan. Use the credit line essay.